Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's November 9th. This will be our chart lesson for the day, and for the most part, this was a range day. Notice your overnight lows are down here, your overnight highs are here, and we traded within that, almost right in the middle of it for most of the day. It looked like we were going to continue the rally. You had a two-tiered channel working higher here, but it just kind of turned over and sold off. And first thing I would do is once you made this leg down, after we started the next leg right in here, I'd look for a measured move, which brings you right back to this breakout area. Notice that we never really tested that. So you would expect prices fairly quickly to come back and test that area. And so that would have been the near term target. And you can see we actually, if you back on out here, we actually came down and tested that support area from early in the overnight, basically early Sunday evening. So turns out to be it turns out you've got a leg right here. Wrong one. And then another leg here, and you can see we basically had a perfect measured move down. So use those measured legs, they'll help you. But really you just about had to trade these shorter term trends and ranges, and we spend a lot of time going sideways today. So some of these areas you're better off just to stay out of. Let me back out where you can see this, and we'll get to talking about the trades. But yeah, when we came off this midline and couldn't get back up here, the odds are once we come down, we're at least coming here, and we're probably going to get some kind of break or something. And you would think we might get a retest. Prices tried several times here and just couldn't do it. So stay with what the market's giving you. But anyway, 7 o'clock came. Where were we here? 7 o'clock came right on this high right here. And as we're rolling over, we're coming back, and you get a first entry long, and then you've got a little trend line working up through here, and this is the first break. This actually breaks lower and turns up. You could wait till this closes and still go long there. It's a big signal bar. It's a big risk either way. I marked it green because it's a little bit risky. It's a good setup. I like the setup. I just don't like the size of the signal bar. As you can see, that's a $525 risk on that bar, which makes it tough if you get it wrong. And it took a minute to really move on out there. So, although you probably would have scalped out of that pretty quickly, especially if you'd have played the break above this bar on the engulfing bar, which is the way I would have played it. So the better entry was to wait for this failed second entry short here. And even that one I marked green because you're right into the highs of the day there. So, but generally you'll get a close outside and two legs up on this channel before you correct. And that's really what happened. You got the leg up correction, the second leg up, and we actually had one more little push before we sold off. And there's actually a lower high right here, but it's right into the EMA, and then we push down and pull back. So you could look at that as a failed second entry short, or I'm sorry, a failed second entry long. But when this bar ends up as an inside bar, and this bar didn't break lower either, so really the failure came when it broke below that bar, which is an inside bar, and you can see it's just congestion. And so finally, you get a lower high here, and then it actually it breaks higher and turns down. That gives you a chance to go short right there. And notice even though this technically is not a new high right here, it still looks like 3 attempts to go higher. So you may take that trade. I like that one. And then prices, you actually get a lower high right here, but I think you're having to go short at the very low of that move after on a second leg. It's just a little bit risky. So I think you're better off to wait. And you just get a first entry here. So, and then finally you get a first entry, And then again, it breaks higher, turns down. You get a little second entry short right there on that engulfing bar. It's a little bit congestive, but the fact that it's running down that key entry point and it tries to go higher and fails, I like that trade. We're probably going lower there. And of course, obviously, we do go lower there, but it's a little bit steeper than that. More like that right there. You get a break, couple legs down, then we're bouncing. And you can see this is a second entry short right here, but the signal bar is just an inside bar. It makes an equal high, and there does appear to be a break and a new high here, and that is the key entry point. But I'd wait, and you get a lower high here, but again, it's not a great location. It does pull back, but when we try to go higher again here, when this breaks lower, that's a failed second entry short. Or I'm sorry, this is a failed second entry long when it breaks lower right there. So I like entering right there. Another trader actually posted this asking about it. This isn't so much a trap as it is just to, I mean, that looks like one leg down. Hopefully you can see that if you use your, forget which one of these does the little zigzag thing. Anyway, there's a little zigzag too that you can see. It runs down, runs up, and then let me just show you with the arrow. That just looks like one leg right there. So this just looks like a continuation, and you can see you basically got a measured move there, and then it went sideways before it dropped a little lower. So it just looks like a continuation of the second leg down to me. Although your entry reason would be a failed second entry long. So I don't know that you would trap a lot of people there on the wrong side, but it's still a good trade. And we continue to go lower, but you're getting too far away from the EMA, too late now. And so now we're trending in the other way. Somebody else took a second entry short here and wondered why it failed, but they didn't have their trend line drawn right. Their trend line was coming down right across that for some reason. I don't remember how they drew it. I think they maybe drew it up here, and they still didn't really draw it. This is like a little spiking channel, and you can clearly see that's a two-tiered channel working down through there until we get a break here. And so technically, well, that's not where he entered because there's no second entry there. Maybe his line was up here. I'm not sure where it was, but somewhere on here he had a second entry, and it was not a great location. And you can see it coming up short here. That's a strong clue that we're probably going to get a break here, and we do. I don't see a good opportunity to short until you get this lower high here. You might consider that one. That's a little trap right there. Look how far away from the EMA it is. I really kind of like that trade. There is a lower high there, so that's a first entry, second entry, but it only looks like one leg up. But clearly you get a break and a move up and a little trap here that far away from the EMA. So, if you wanted to be a little aggressive, that's one that you might want to be a little aggressive with, because that gives you a great opportunity because there's so much room back to the EMA. Notice how we push through, pull back, test it from underneath, and fail again. That's your lower high. And again, it's right off that key entry point. And there's a failure down here somewhere, but it's too far down. I think you're better off to wait. And then we just kind of go sideways. Just stay out of that. I marked that purple because don't try to trade that. I want to say there's always somebody that'll ask me about a second entry in here and why it failed. That's just congestion, and you can forget about second entries and failures in congestion. Or all congestion is a micro range, and the only way to trade ranges is to sell the highs and buy the lows. And second entry, you just get chopped to pieces in that stuff trying to trade second entries and failures. So forget that. If you get a good setup off the lows, you might go long. If you get a good setup off the highs, you might go short. And I just don't see any that I like there. You may have thought, hey, I might have enough room here, but look, your lows are just right there. We couldn't get any lower the last few times, and notice it doesn't go very far. It might have still been enough to work, but I wouldn't risk it on that big of a, I mean, that's a 300 bar risk, a $300 risk right there. So, but it bounces, and then you're kind of working down, and this is like a little, somebody will ask me, why did you draw the channel here? Well, it's really where the downtrend started, and you couldn't make it fit any other way, really. So that's why I drew it like that. And notice you get a break and move to a new low, and then we corrected for a while. So there's actually a shorter term trend right here. And hopefully you can see that. I didn't have it drawn, but you got a break and a new low, and then there's a little two-legged correction. And so it's like a little spike in channel. It's not a real obvious one, but that's the way I would see that right there. And you're just working down. I don't see, can't remember if I talked about this trade yet. You made that high. You try to go higher once, try to go higher twice. There's still not a whole lot of room here, but notice how this pushed to a new low and then comes back. Most likely you cleared most of those stops and stuff out. So with it trying to go higher 3 times, there's probably going to be some trap traders. And you can see how quickly it sells off right there. Those lower highs each time is a good sign we're finally going lower. Notice here how you're just working sideways. Here you're working down, making lower highs and lower lows. We drop on down, we come back. There's just a first entry there. There is a lower high here. I'm not sure which way this broke first. If it probably broke lower and then came back up and then turned back down. Actually, it did because it didn't break higher. This is the one that didn't break higher. Okay. You don't want to go short there, but it's not really a new swing high because it didn't break higher. So it's just a continuation there, a little congestion. There's just no real good entry right there. It's unfortunate because you don't really get a chance to enter that. But finally, you get a first entry and then a second entry. This is your first break of this channel. Everything's still below the EMA. You're moving up. It looks like you get a little close outside, then a move higher. You probably could adjust this some. You might could say it looks like that, but you can see how it's not touching there. If you get it where it touches all the closes, it looks like you get a close outside right there, and it does fit like this on the other side pretty nicely. So it's a second entry and a strong move down, and we're looking for those measured legs as I showed you before. So in that first measure, it's way down here still. So, but you're looking for a new low on just this little short-term channel here regardless. That's a second entry short, and that's the first break of that trend channel. Then we're working higher again. You get another second entry. Again, this is one that breaks higher and turns down. But by the time it breaks lower there on that second entry, technically the second entry triggered here. And that's not a good enough signal bar, neither is that one. And you might take this one, but it's still a really big bar, and it's right into the EMA, and you've already had a break and a new low. So I don't think you want to risk that. Wait, see if you get a little better set up, and then you do get a lower high here that does confirm that trend line. And so I like that one. You don't get it's not really a failed second entry long either, but it still acts like one. Push through the EMA, pull back and test it, and then turn. And that looks like one leg, so you're probably going to get another leg. Then we bounce, and we're just kind of going sideways. It's really hard to know what's going on here. You finally get a double test. Notice you made that low. You test it once, you test it twice, and that's a fairly decent bar with a little bit of room back to the EMA. You may take that trade. I think you're better off to wait on a higher low, though, and you don't get one. It just goes back to the other side. Too congestive here to try to go short. And then finally, this is actually a failed second entry long here. Notice the new high, and you try to go higher once. You try to go higher twice, and when it breaks lower right below this bar, it's a failed second entry long. And that gives you plenty of room. There's a lower high here, not a very good signal bar. Then you're just kind of chopping around sideways. It's really hard to know what's going. Look how flat the EMA. Just stay out of that. The only way you can enter is down here long or up here short. I did mark this one, and it probably should have been green. Let me explain this one. Notice your new high. You try to go higher once, twice. So they're probably going to trap some longs there. Um, but it's right in the middle of this range. And that's, when you're kind of chopping sideways and the EMA is that flat, it's generally not a very good place to enter. And so that's why it really needs to be green. And it would have worked, but notice it doesn't go far before it bounces. And there is a failed second entry short here, but you're going long right into the place where you might generally be going short. So in this case, it would have worked, and it pushes on higher, and we ended up getting a trend here, but it's not a very good setup, so you just can't take it. You get a second entry here, but not a very good signal bar. Then look at that tight congestion. Just stay out of that. And then finally, you get a failure out of it. So you got plenty of room back to the EMA, plenty of room from here to here. You do get a break in a new high. Generally, you're better off to wait on that lower high, though, so that's why I marked that green. But you don't get a lower, you do get a lower high way down here, but you don't want to take that because there's too big a chance it bounces and comes back just like it did. And you had a little higher low here, but not a very good signal bar. It ends up just being congestion. And then finally, you break out the upper side again, come back, bounce. This actually should just continue on across here. And it bounces off those lows. So you get another, there's a failed second entry long there, but again, by the time you can enter, it's just not a very good spot. And then finally you break out the lower side and you get a first entry and you get a second entry and you get a decent signal bar too. But the real reason I like this one is because it confirms this trend line here. And it's a second entry short. And technically you could call that a double top, so it's also a failed second entry long. And it's actually the fourth touch of that trend line with a nice bearish bar. So I like that one. Here it's too congestive. You do get a lower high here, which you could call a failed second entry long, but you got to go short right at the lows there, not much room. And you're not back to the EMA or the trend line. It works out, but this turns out to be a pretty nice trend down. But you really just don't get a chance to enter it. You could always argue that you could enter on any of these down through here. There's a second entry short right there. It's not a perfect signal bar, but it's still relatively bearish, so I marked it. Marked it green though. There's another second entry there, but that one looks too congestive. And that's just actually that's just a first entry. You didn't break lower right there. It's too congestive in a way. The second entry is right here, and you get this big bearish bar. And then you get a lower high, so I like entering there as well. And this little trend line is pretty steep here. So you're working up, you get the break, you move to a new high, then you get a lower high. And then that takes you up to 2 o'clock. So I like both of those entries just at the key entry point. I mean, this channel is still in play till you get a break, and that's not till after 2 o'clock. And then notice you got a break, and then you went lower again. And this is, you could also argue this is a double test. You made the high, you come back once, you come back twice. So there's another reason to kind of like that trade. And that's pretty much what I saw today. A little more, I would say, a little more of a sensible day compared to what we have. It's still a little volatile with, swings in both directions, but at least you were getting some extended trends here, and the price action was really kind of playing out. So we did get a couple of sideways periods here, but it was a little more sensible than what we have been seeing. So they did go back to regular margins. I'm assuming they'll continue that. I don't know if the volatility's, if this election's resolved or how long this is going to drag out. Biden says he wins. The news agencies are calling it for him. Trump says no. There's too much voter fraud. So who knows what's going to happen. We just have to ride this thing out and see what happens and hope for the best. And in the meantime, maybe we'll get some good trading out of it. That's That's the best I can tell you. The key is just follow the price action. And if you understand what prices are doing and how to read them, then you can, for the most part, stay on the right side. And when you are unsure, that's the main thing. Anytime you're not 100% sure on what prices are doing, the correct answer is no trade. No trade is better than throwing a dart at a board and being wrong, because you know what happens when you gamble. You lose, and gamblers don't make it in this business. You will lose. You will go bankrupt. You'll go broke. You'll blow your trading account. You'll give it to you'll be a donator, and you'll donate all your money to people that do know what they're doing. And so anytime you're unsure what prices are doing, just don't do anything until it clears up. Get up and walk away. Take a break, 15 or 20 minutes, come back, take another look at it, and see if it doesn't look clear. Because it really looked like we were going to go higher today, and the next thing you know, we're really, a lot of this is sideways with a downward bias. I mean, from here on, this was a downward bias type day with a lot of sideways action. So make sure you find these little short-term trends and channels and so forth, and that'll help keep you on the right side of the market. And if you're not sure, don't do anything. Just wait until you are sure. So anyway, I'm going to wrap it up. Actually, I wanted to make one more little comment. Just for temporary, short term, if you wanted to be a member of our forum, I've got an option where you can join the forum only for $10 a month. It's just going to be a limited time to let some people kind of come in and try it out without having to pay for a premium membership, but still be able to participate in our support forum. So if you're interested in that, go to the site. You can sign up for $10 a month, and you can halt that at any time. But it just give you a chance to kind of see. I still think it's worth it for all the other stuff you get with our premium membership. It's probably worth it to go ahead and sign up for the whole thing, because the video lessons are really almost invaluable, and they'll really help explain a lot of this stuff a little clearer for you. But if you want to participate in our forum, I'm just trying to make it a little easier for people to get in on the forum without having to really buy anything from us, so to speak. So, but I don't want to make it free, because I don't want anybody and their brother coming and going. I want you to have $10. If you can't afford $10 for a month, then you don't need to be day trading anyway. So that's just a way to make it where it's almost free, but yet not just anybody and their brother is going to come in there. So I want to keep it a private forum, and if you do come and join, all I ask is that you don't use profanity, don't be a jerk, don't argue with people, be nice, don't belittle people. If you don't agree with them, that's great, but just be nice about it. That's all I ask. I don't want it to get out of hand like a lot of these places do, and that's what generally happens when you open it up to the public. So I was a little leery about starting it, but it's been really good so far. Most of our members have been very reasonable and very nice to each other, very helpful to each other. That's the most important thing, is that people are helping each other. And we've got some good people in there that know what they're doing besides me that can help you. So if you're interested in that, feel free to join. It's only going to be $10 a month for the forum only for a short period, and then I'll probably shut that down. So I just want to give some people opportunity to take a look at it without having to spend a lot of money or commit to anything really. So it's there if you're interested. All right, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.